Singapore has maintained its full-year growth forecast at 3 to 5%. Economic growth is expected at the lower half of the forecast amid a weaker external environment. Analysts note that the reopening of borders will support related sectors like aviation and hospitality. Alicia Rodney with this report.
Singapore's economy grew at a slower pace in the first quarter. Growth dipped to 3.7% on year from the previous quarter's 6.1%. The manufacturing, finance and insurance, as well as the professional services sectors, supported the expansion. But the Trade and Industry Ministry expects a weaker outlook for some outward-oriented sectors.
As China is a key market for petroleum and chemicals products from Singapore, its economic slowdown is likely to adversely affect the growth prospects of Singapore's chemicals cluster and the fuel and chemicals segment of the wholesale trade sector. Meanwhile, growth in the water transport segment is expected to be weighed down by prolonged supply disruptions and port congestions worldwide.
Economists expect growth prospects for some sectors in the months ahead.
There is still a fair bit of demand on the semiconductor and IC side. I think the second thing to look out for is that oil prices remain fairly elevated, in part also due to OPEC Plus inability to ramp up production, even though supplies from Russia have been disrupted. So I think that's going to basically keep oil prices high, and hence Singapore, as an oil refinery, will also benefit from some of these elevated oil price effects.
The pace of Singapore's exports also slowed in the first 3 months of this year. Non-oil domestic exports grew 11.4% on year. That's down from the previous quarter's 20.1%. This expansion was mainly driven by non-electronics exports, such as specialized machinery and pharmaceuticals.
3 key destinations for Singapore shipments have actually contracted in April. I think more pertinent is Hong Kong, and that basically does suggest, given the proximity of Hong Kong to China, this basically means that the slowdown and the lockdowns in China, it's slowly really, having a negative ripple across Asia.
Industry watchers believe exports growth will slow in the coming months. They point to China's slowdown and global supply chain disruptions.